you. 7 of you waiting, 1 of you thumbed up already. Thank you so much. So what we're talking about today? Well, it's the big fake number day on the payrolls. And it's also the day we have our live trading day. So watch out for that link being shared in the feed while we talk. Tell us where you guys are at. What part of the world are you going to be watching the number come in from? And what do you anticipate also? Do you think we're going to pivot a little bit into the fear zone? Or are we going to go carry on as usual, stock market to new highs? How do you think it's going to turn out this particular Friday? I feel a pivot. Here's why. I'm going to talk to you about charts. It's kind of hard to listen and talk to you about charts, but here's what I think is going down. First of all, targets. If you follow and you click and register for our free mini course, you'll get our newsletter. The charts are in there. Some of them, not all of them, some of which I share only in the community. But here's a couple of the key clues that we are going to be talking about to you today. Gold and its localized target is one of the big ones. We've made that well known, and I'm looking at it now right here on my laptop so that I've got all my crib notes with me. And essentially we're talking about a 3,900 run, a 2,900 run. Sorry, I just added some tariffs and inflation to my target. I didn't mean to do that. That was a slip of the tongue. Yes, so 2,893, 2,897. And you probably won't know this unless you've been following us for a while or you follow our detail quite closely. But we've actually called for this target right the way down, all the way down at 2,000. We've been on Palisades Radio, we've been on SD Bullion, we've been on Franklin Mint, we've been on ITM Trading, we've been on all the gold channels, Saul Financial, check them out. We've been with... Oh my goodness, I'm going to miss someone out and then I'm going to be a bastard. So many of them, and we've warned, listen, we've got a leg up from 2K to the doorstep of 3K, not through 3K, on balance of probabilities, in my opinion, first. And that is a 2,900 run. All our targets are almost 2,900. Look, we'll still be right if we trade 2,899. But I don't think it'll stop just there. You'll probably take the 2,9 level. But only in an exceptional case, if there was a real blow-off spike, could you see 3K. Our overall view is 2.9 is going to be a localized high for gold, and that you're going to go into some degree of congestion, sideways and downwards. And this is normally fear-based, good people. It's normally fear-based. All the best, Francis. Hello from London, Cardiff and Wales. Yes, come on, the Welshmen. Let's get our rugby back up to where it was before. Yes, we need the Red Dragons back. Anyway, so what is he talking about? He's talking about a potential bit of fear coming through. Now, some will say, oh, but the tariffs got wound back on Mexico, and that the 10% on China is inflationary. That's not been wound up. The other numbers were draconian, quite potentially set to scare and intimidate, etc. Had its effect on the currency markets that probably recovered a little bit since. We'll have to check. But the key thing on China is 10%. That entrenches the inflation and higher inflation. Because the counterparty, as I've already mentioned a few times before, is energies. China taxed energies, American energies, gas and oil. So what does that do? It makes their input prices more expensive, and Trump's taxing on top on the final good being produced and delivered in the USA. Well, that makes your price at the till more expensive. So input prices are going to go up for any amount of you. Now, I don't have the percentage breakdowns on how reliant China is on American gas and oil. I would imagine they're quite well diversified on suppliers, so it would certainly not be anywhere close to 100%. It's probably a moderate percentage. I would imagine a lot of Saudi oil would be going across there, and et cetera, et cetera. But anyway, that energy is going to put their cost up at the cost of production, and then Trump's going to lap it on top. That means everything for an American gets more expensive. And as I've said before, the Chinese aren't going to compress their scaled margins much further. You know, it's going to be very difficult to find another provider in America for the goods that are being assembled in China. So we have this globalist NWO workshop, where supposedly the workshop is enemy with the final buyer. Well, at that level, but they're both controlled even higher up. That's how the game goes. But anyway, trying to understand the direction of markets and the pivots and the charts, We think the 2,900 is going to be significant. Let's be clear, we are macro long-term bulls on gold. So that's monthly charts, weekly charts, 6 monthly charts, annual charts, you name them all. Bigger numbers are coming in our macro views across the board. However, the reality is 3 months can feel like a long time. 6 months can feel like a long time. We've already had almost 3 years of sideways when gold hit its high in 2020, the late end of 2020, and you only really broke out properly from the 2K level at 2024. So how badly do you want to be leverage longing and buying every story about, and they'll leak stories like this because they know it will get retail to rush in. They've allowed gold this amount of inflation. They're going to cap it. They never let you have a one-way bet, generally. Howdy, Francis. Do I leave my XRP where it is? I need to buy a ride. Look, I don't want to sell my gold and silver. Keep your gold and silver as investment, generally, is what I will do. That's a long-term macro investment hold. But you've got to be careful about trading it long right now or putting a lump sum in right now because you might get a localized high. You want more ounces generally. If we're to be right on the fact that we have a confluence of targets. Remember, targets are run through. They don't stop at. So, you can trade $2,970 potentially and fall just short of 3K, or you could be 2,910. Who's to know on overperformance? And you could have, in an exceptional case, if there's a bit of panic and retail actually has quite a bit of a wag to it, you could even have a 3K run. Don't think so. It's not my primary scenario. I think after 2.9, you turn. So what's going to be the reason that 2.9 is a turn? How does that turn come about? Well, what you could get is disinflationary forces. So that is negative for economic growth across the board. Negative for economic growth could see the dollar gain its strength again. Now remember, it's the only currency that goes up when its debt collapses. All the others go down. And we are facing across the board debt as assets class collapse. That's where you've got to start mentally every time at the top. Say it yourself. This is an across the board at every nation level, a debt-based collapse. However, in America's personal situation, they are one of the most indebted with the highest interest payment, combination of debt owed and interest payment. So they are being absolutely sucked dry to the banking cartel, which is the mercantilist extractors. We can save that discussion for another day in another YouTube channel. So what we could get is some dollar dominance. Now, we've also done a chart that was gold long and WTI oil short. Now, the short broke down, then it's hung about, it didn't go further down, then it actually had a spike up, and then it's been coming back down again. So broadly, since we called oil short, it is a little lower, but it's not been a great ride. And if you'd just done the oil short, it would have been a bumpy ride as well. But you would be marginally up, but you would have sat in it for a fair amount of time. So the bulk of the head and shoulder that we have, which is a different chart now, we're talking the chart of oil divide gold. So we measure oil in gold ounces, and we measure gold in oil barrels and barrels of barrows. We measure them like that to get that 360-degree analysis. Now, there's a head and shoulder in those. This is one of the reasons why we said energies will broadly disappoint in the commodity trade of inflation. You want to be in the real money commodity, which I don't see as a commodity. Gold is noble money. Everything else is derivative and fiat. So that is the replacement reserve asset, just as our core statement that comes right out the top of our head, first thing we say, a broad scale debt collapse is where we are at. And it is the foundation before currencies of the fiat money that is borrowed into existence. So different rates of debt collapse will have effect. That's why the pound collapsed when they had the Liz Truss pension drama, when they went to growth budget with Kwasi Kwarteng. You actually had the debt go down in value, the pension fund couldn't sell, and at the same time you had the pound collapse. Only America goes up as debt crisis goes because it is the current nation of primary supplier of the world's primary currency. And many offshore nations have borrowed in that debt and need to be buyers. And the more they collapse, the more of their currency they have to print to become buyers of dollars to be able to make those mercantilist, extractionist, economic hitman loan-based payments, which pushes the dollar up. And that is the fear trade. Dollar up is a fear trade. That is why we say what is coming next after the localized high, if we to be right. So there's lots of points of failure here, guys. We can 100% be wrong. We regularly are, and it's okay. We're bold. We put out views that talk about the future. We're not scared to be wrong. We show up and we be wrong and we fail. We're the chimp on roller skates that falls down the staircase, and we're not ashamed. We laugh, and everybody hits the like button, and that's their Instagram thing on the day. So it's not about being wrong or right. It's about making money. And actually, you can save not losing money, which is almost the bigger important thing. Rather than say, I look at the current point, we're coming into a payrolls number today, guys, and I look at it and I say, okay, how much do I stand to gain on the upside right now versus potentially how much I stand to lose? Let's walk and talk. And is it an asymmetrical upside at 2,900 for me with two targets confluencing at 2,893 and 897, so close. I mean, on such a range to have two of them at that level, the technical patterns, or is the downside of a little bit of a, say, you could have a 20%, 30%, or a 15% correction. How likely are we to surge 5 or 6 times? By the way, the RRR on this trade that we gave everyone on this YouTube channel some time ago, the risk-reward ratio on that trade is over 38 Rs. So if you had risked $1,000, you're $38,000 to the good in a year. Now, I don't even want to try work out what that is in percentage terms, but it sounds like 38 times. And I think that's about 3,700% in a year. That was given to you on this trade with a super tight stop with a beautiful squeezy HVF, Hunt Volatility Funnel method, kicking it off for its initial move that took you very briskly away from your stop and deeply into profit, and then it's just worked its way over the course of a year, and it properly got moving in February 2024. And here you sit, you're looking at me 1 year later, February 2025, and we are $50 away from making that target that was 900 given to you. A major bull flag, and we've said this on many channels, and we've said it on our own channel more than anybody else. So you can know that, go look at history. You've just missed a 38 RRR trade by not being in this one. And that's okay. There'll be other opportunities. I'm missing things all the time. The truth of the matter is you can get 2 decent trades every year and miss making a risk reward like that, where a 10 grand is 380 stop. 50 grand, you guys can do the math. And we're very bullish gold. We're happy to trade gold to the upside. We are super bullish. So inside of all of this that I'm saying to you, this turns out to be a heck of a trade. But when it hits targets, it's kind of like XRP that hit a target recently that we said we think this is going to be a localized high, 3.36. What happened? It traded 175. You got your 50% sale on that high beta asset class right down after that target. Now, there's a massive difference between selling at 336 and buying and selling at 175 or 180 or even $2 or 250. Listen, no one buys the bottom or the low. That's perfect world. Sometimes it happens when you're not trying and you're lucky. But you can buy that asset at $2 or even $2.20. You would have plenty of opportunity. Having sold at 336, that's actually a third times more. You instantly get 50% more of that token if you wanted to get straight back in. And I'm saying, hold on, it's a marginally higher high, XRP, it's going to underperform for a bit. Even though on the super macro we see at $19.35 run, which is, again, a macro HVF. So you want to bias long that, but there will be localized highs along the way in the same way as gold. Bitcoin had a 97,000 flag target. Sharing on X, formerly known as Twitter, some of these charts that I've annotated for you. And we charged up from the lows of 49 at the yen crash all the way up to 97k. And since then, you've gone to 108 and 109. But after 108, you traded down to 91 grand and 90 grand. And then you went up to 109, and then you've traded down to 91 grand. So you've actually only been pivoting, making a sine wave around the 97 and 100k spine of the target. And it's actually not been a particularly good period to be trading net long, especially as people trade upward moves. They're FOMO chasers, and they get flushed out with hectic leverage slaughtering 2.2 billion on that last sell-off, and that doesn't involve me, and generally it doesn't involve my community members that are doing what they should be doing, because we're not leveraged long in a bad period without an HVF method and an asymmetric reward to the upside and a controlled stop with the stop pre-calculated already in. So Bitcoin has shown you that there's not that much excitement once the 97k flag is made. That's having to work it out. It might even make a head and shoulders and pull back. Then, so we've got Bitcoin doing that. We've got the XRP later making its final high at 3.36. All of these things like localized highs. And as I said, Bitcoin can roll over and come off it. It's gone sideways. It was the first to top. And now we're getting gold up to that. We could be getting ready for a little bit of dollar strength again. We could be getting ready for a little bit of dollar strength again, and that could be very strong dollar, and that we have trades for that. We have upside HVFs for that, and if we're seeing gold no longer going up easily, that could mean the dollar being stronger. It is an anti-dollar. Remember, it's an anti-fiat, and the king fiat is the dollar, so it's an anti-fiat. So you could find yourself doing pretty well by actually hedging a little bit your gold exposure. And you know what's even better hedge is the consumer wrecked commodity that is oil, because we still have gold due to overperform oil, because we do 360-degree analysis. Look at the side, look to the right, look behind. We've actually become aware that oil is still likely to underperform and make its head and shoulder target to the downside. And as a result, oil is likely to perform worse than gold. So if gold goes a little bit up, a little bit down, a little bit like Bitcoin since 97, might go a touch higher and then go equivalent amount lower, but churn, less strong pole upside performance that we've had over the course of the last year. It's done 45%. If it goes from 2 grand to 2.9, it's done 45% February to February. Not January to January, but February to February. So it's not going to do that over the next 3, 4, 5 months. You could hedge it by remaining invested in gold and maybe put a bit of the short on the oil. Because if the dollar goes up and we go into fear, typically the dollar goes up on a bit of fear, that'll drive a little bit of money back into the debt markets, less and less people wanting to buy it, but they need to roll all that debt and the interest rates are too high. They need to get a little bit of interest rate low to try roll all the Granny Yoda Yellen minefields of stock that she brought them to actually roll over. Let me show you a couple of cute things over here. I think I'm going to get attacked. Small sidebar on the Yellen and the rolling of debt. Here's my family of friends. Let me see if you can see them. Hello, baby. Hello, birdies. Hello, birdies. Hello, babies. Hello, mama. You might hear the mama hissing at me. She's like, go away, bald human. Do not eat my little chicklets. Anyway, so with that all said and done, Yoda Yellen left a real minefield, and now Trumpy and his vice president, elongated muskiness, needs to actually, he's got his real vice president is just a CIA operative. So, that's just to keep an eye on him. Trumpiness, they all are in their varying ways. Trumpiness is sitting there and his financial department and saying, it would be good to get this interest rate payment down. So we get a bit of dollar strength, we get a bit of fear, wobble the whole world economy. The tariffs on the 10% on China is far more meaningful. It's way more goods. It's a smaller tariff by percentage, but it's more meaningful because it's actually pointing at the BRICS nations. The truth is, Trump just wants to show Mexico and Canada that he could bully them if he wanted to. So he talked it up. Now it's not looking like it's going to happen. The real thing is China. And he has to still be careful. People don't realize, because good luck finding another supplier that'll do most of the things he needs at that price. But at the same time, it's a mutually dependent relationship. Good luck to China trying to find a new buyer the size of US. So that's mutually dependent relationship. So I'll stand in the shade here so I don't burn the top of my head. So that payroll number that we expect coming today, guys, that payroll number is, I anticipate, a potential pivot for fear. So it could come in unders. Now, I didn't even take notice of the ADP number. I can go back to my laptop. That's a payroll service that has a lot of companies, does a lot of payrolls, and tells you an early kind of indicator of that. But if we were to get a bad payroll, a really undershoot that everyone goes, ooh, the world's slowing down, what you could get is a little bit more pressure on the Fed to cut rates. Trump will say we need more, Biden has destroyed the economy, we need more, lower rates. That'll actually be to roll all the Yellen debt at a lower rate so that they can survive a little bit longer. And what you could get is dollar strength, and you get pullback on all the risk on assets, which has been speculative, that is funded by leverage and debt. So you get a risk-offy vibe, and that could be bad for crypto, Bitcoin and crypto. I actually have XRP over the short haul, I think is going to listen to what I'm saying, short-term underperform Bitcoin. We've got technicals for that. It made its upside relative highest valuation to Bitcoin, made that target, and then ran the funnel of the HVF. So I think it's going to underperform. We've got USD T.D, so tether dominance, and it's in a little bit of a W bottom reversal. So what we're going to actually see is a little bit of people in the future running back into stables. We like to be ahead of the stampede. You don't have to be first. You're rarely going to be first. Insiders are first. They're also 1, 2, 3, and 10. But if you're in the first 12, 11, 13%, you don't take the battering. You're not the guy who's trying to hit the cinema door when everybody else is, the great big middle normie curve, the bell part. You're not part of the stampede and the scrum, and that's when you get bad slippage, bad timing, and bad losses put to your name. So no worries about confirming. Pelosi is an insider, says someone. Small hats. Yes, I can see the boys are in here. Anyway, so this is what's potentially this would be my by default scenario. Live trading day, come and watch the number in. Have an experience with us. It's going to be entertaining. It's going to be fast-paced. We're going to run the ruler over the traditional markets for an hour and a half. You'll get the recording. You'll have access to it for a month. And actually, if you buy 3 for the price of 2, you'll have 3 months of access for 3 of these in a row, where you'll get my best take and some of the tokens I'm most interested in, the ones I think that will actually be counter-cyclical. There's one in particular in mind that I think will be counter-cyclical if we have a bit of a pullback, dances a bit to its own tune. And then, of course, what you could trade on the long side during this fear moment. And in actual fact, that the debt markets could actually get a rest, the valuations. I know I keep saying it's a debt-based collapse, but it'll be steps, remember, and contagion. Steps, contagion, collapse, hold, little bit of a weak rally, suck everybody in. That's it. The bottom of the debt markets are in. Bonds are the best value they've been in years. When they start talking like that, get ready for the next smackdown. Let's have a look at some of your comments. Join our live trading day link is right now up there. Where are you checking in from? How are you doing? What do you think? Are we going fear, or are we going to continue with the equity up? So the equities I haven't spoken of so much, but I actually have one equity index that I've mentioned before on this channel. That we discussed, and I would even say should be part of investment portfolio. That's the accumulation of the STI Straits Index, that is Singapore, and I highlight that actually the US equities could start looking a bit overvalued, and you could start to have investment money draining out of that. It's benefited immensely because of two things: the unicorn tech dark state cartel that's located very close to all the VC money and the scaling of dark states, Californian garage created unicorns that have bottomless overdrafts and get to become real big and huge server farms and all of that. They have no problem raising capital and running 20 years without making a profit. Don't worry, they'll be handed government money and all sorts of things will happen. But that can happen in other scaled nations like China, for example, or elsewhere in the Far East. Certainly not going to likely to happen in Europe with the way they're doing. But long term, though, even those can come into some trouble, the Mag 7, and the dollar could be a little bit of a wrecking ball stage. Like Brent Johnson has said before, and do some harvest as a milkshake. That party gets is 100% accurate, according to me, and it's good thinking on his behalf. But the point is, in the long run, gold will eventually have a moment where it goes up on dollar being wrecking ball. I don't think we're there yet. So localized high. And greetings from Nigeria. Hey, Mohammed, thanks for checking in. Minnesota, long-term macro gold, monthly and annually. Someone's asking, Dave Mitchell. Bull, macro bull. I will not sell my investment gold because of a localized high, that lasts 3 or 4 months. Good luck trying to get it back and buy it back. You're going to get unobtainium. The thing with investment gold and silver is you don't want to sell something you might not even be able to get back at a rush moment. So that stays with you physically, under your control. I'm doing okay, thanks, Bob. Joe Porter, how are you? Yeah, Dave Mitchell, thumbs up. I'm Chinese and do not speak English. Can you do your best impression? Greetings from Nigeria. Yep, okay, we got that. Welcome to the Nigerians. Hello, Africa. Tell me how you're doing. Okay, so big data release today. Links in the description. Book it. Grab it. It's $197 to visit once for 3 hours. What is that? It's less than $50 an hour. And you get to enjoy time with us. You get access to the recording. You get to see potential trades. And we are calling localized high. Key message. Localized high on gold is likely to point to a dollar strength period. A dollar strength period, and that could see the USD Korean won come into favor. We've given you that before. We've called that macro trade. I think crises could come at some point. They're going to become part of the story very explicitly. We had a little bit of a flare up with a political event last year in December, but that's going to come back hard and heavy on a much different level. It might involve North Korea, it might involve China, who knows, we can't say. But that thing's going to become the story. It's going to be of the first world currencies. Don't forget, they are brands like Samsung and Kia and Hyundai and all of this. This is not Mickey Mouse nation. This is not a third world nation. It's not the biggest first world nation, but it's still substantial. There's something coming on that one. Do not forget, we are the USD Korean won, guys. When it happens, I want you to acknowledge, for a decade we've been talking about that guy and watching and stalking, and we've been talking more of it as it's triggered. It has triggered now. That is a very long setup, and that is literally a halvening of the currency. Literally, it's going to go up 100% dollar to the Korean won. Dollar strength, so keep dollars in the account instead of DCAing XRP and gold. There's never any problem with DCAing, because you buy more on the downside. DCAing, you wouldn't necessarily change your routine and discipline for possibly a 3-month pullback period or a 6-month bear, or even a mini 6-week one. I can't tell you how long. If it's a serious fear, It could be a lengthy one. It could be a not much more than the carry trade in the yen. But don't forget, Bitcoin went from 70 to 49 in just that one event. And then it's been spoken about. Everyone became an internet expert on the carry trade. And then, boo, it's gone. Now will it re-emerge? We don't know. But so who knows the duration? That's not something I can answer. I don't have a means to measure it. I do have a means to measuring localized highs, and it's still an on-balance of probability, but you get luckier guessing when you have a method than when you just out and out guess on things you have no method for. In that circumstance, your guess is as good as anything I can say on duration of how long. So I would maintain DCAing, but you could DCA, you could build cash as you suggested, and dollars during that period, and build a little bit of a lump sum. So if you have, your $1,000 a month left over after you've paid all your bills, that's what you pay yourself. Normally it's going in XRP and gold. You could stack a bit of cash, and then suddenly gold drops to 2,700 or 2,500, you're suddenly getting more ounces. XRP drops again to 195, you end up with a whole bunch. But don't be too quick either, because who knows how long, but I think you'll get a bargain if you have fiat. Be careful where it is, though. You've also got bank risk. If the crisis turns out to be a bank risk, who knows? Buffett has hordes of cash. He's been good point. That was Joe Porter over there. Hello from Belfast. Cool. Bang bail-ins. Someone can smell the cacao of what's coming. So big targets on gold. Gold is a key money, and it's had a reserve asset run at the expense of debt. Maybe debt gets bid up a little bit. Not the time to put on your TLT short if you haven't been short already from a lot higher up. Okay, check us out. We'll be starting soon. You'll get the link. One visit. What will you learn, by the way? So what's the benefits? What's he even saying? Why do I need to do this? I've just listened to you on YouTube. What am I going to get? We're going to go walk in. Great audio, visual, charts, key trades, key price levels for entry, key stop placements, risk rewards within that, the risks, the possibilities, other things that could move, real potential trades where you have pending entries. Potentially, you may even get triggered on the volatility of NFP. We tend not to want to be playing the volatility. We'll see if the news confirms our suspicion, a bit of fear in the overall strength of and that can be fear on the American economy. Remember, it's an American stat. And we can get a little bit of hard news. You'll get real valuations. You'll know where you take off, much like I'm discussing. Can tell you when we're long. I've shared the chart, 38x. Where the entry was, where the stop was on an upside HVF. That started the whole process, that broke you into a bigger time frame, bull flag, whose target was 2.9. And as we approach the 2.9, you get another final HVF setup winding up that is delivering you to that target without anything more, no bonus. So you now have a confluence of a very big weekly bull flag and a 12-hourly HVF that was all started with an HVF, utilizing HVF method to break into major secular moves so that you have a leverage trade with asymmetric reward, with a real known entry, a real known loss that is predetermined before you are either in the trade. Guys, I want to make a small final story for you, just as to why people don't understand the value of what I just said. I'll tell you a story. Food is really good down here in SA. There's amazing ingredients. Things are very healthy. To be successful in the restaurant business is tough. You need great service. You need good food. People can buy awesome stuff from Woolworths, which is actually a different brand to what it is in the UK entirely. It's like a luxury Whole Foods meets Marks and Spencer. You can cook pretty well at home. You can get access to the farmers a lot easier here, etc., etc. I'm going to tell you a story about a guy that is running a multitude of franchises. We have franchises here that are pretty family popular. They're going to be broad markets, so it might be more of the African indigenous market than the wine market. This guy's got umpteen brands that are serving the mass affluent African market, and he was an engineer. This guy I know of. In fact, his son was in school with me. He was an engineer. He's totally process based. This guy is a guy who's totally process-based. He didn't like accountants. He went and learned accountancy as an engineer to get the economic data he wanted out of the performance of his stores. The one major franchise, South Africans will know this, the Spur, he actually went to them and said, there's too much wasted space in the kitchen for people to stand around in. They've got to operate. That's how much space they need. We can get more bums on seats at peak periods. Remember, in restaurants, you spike and you dump. You want to be able to take everybody, not make them wait around. Otherwise, they go next door. There's food courts. People can move to the brand next door. If you tell them half an hour to wait before you get to sit. The franchise that have been running for ages took his advice and changed the floor plan, because he's such a successful franchisee that has high service standards, good feedback, and many restaurants. This guy has even started getting his own supply meat, making his own burgers because he felt it's better, and the other franchises are now asking to have his, and he has multiple of them across brands. He is an absolute technician on process. He has that engineering brain. So he has a multitude of them. He knows all the financials, all the tax, all the everything, the feedback. He is on it as a numbers guy. He's the spreadsheet detail numbers guy. What's coming in, when to be peak, how to do it, how he can be better supplied, how he can have better layouts, staff's training, and every single thing. And let me tell you something. He's regularly asked to take on new franchises. And his rule is always the following, because they have franchise that's maybe not doing as well, getting worse feedback. They have a very big, busy waterfront in Cape Town, and there's one that they're getting quite crappy feedback on. They want him to take it over, all these sort of things. When he takes on a new site, I tell you what happens. He says he gives it a few months for settle-in period and for everyone to realize he's there. They do the marketing, all the usual stuff, and that's what they need. Even if it's profitable, if it's not making what he expected by a certain time period, he says, not having the site anymore. And this is, by the way, let's give you the example. One of these is Spur, which has a huge setup cost. It's kind of, if you wouldn't get away with it in America, it has Red Indian type vibes. It's kind of a steakhouse, but it's based on Red Indians and, you know, the cowboy in the West, and it's got a chief with feathers and all of that. It would be called cultural expropriation in the US. We're so far away and we don't have any Red Indians to complain, so we get away with it. But it's a lot of woodwork. They design it out. It's a whole bunch of it. It's expensive setup to get a Spur. He strips all the stuff off, gives back the land. He does a temporary lease until he's got at least past the first 6-9 months. He takes it all out and he goes to a new site, and he does all the, you know, the income group. He knows exactly who his clients are, but occasionally, even still, he gets it wrong. And you know what he does? He cuts it. He cuts it like a dead girlfriend that said the wrong thing to him. He cuts it off like that at the knees. Bang, you're done. He leaves shop. He takes everything of value, and he takes the staff, he distributes them between all the other centers, and he says, next site, this one ain't good. Because he knows his processes are so good, he knows his risk reward is so good, he knows how to run a shop, he knows how to manage it, he puts good people in, and if the people are right and everything, whatever he heard about the income group or people going in, if they haven't turned enough to give him a certain level of profit, not loss, not cutting a loss, if they aren't giving him what he expects, he gets out before it hurts him. And that is experience, long-standing, process-based experience, real knowledge of how to execute. You can become that guy as a trader. But the one thing you learn from a guy like this is he cuts losses even before they're losses. There might be losses in time, effort, and everything else. But he is running a scaled operation with data coming in everywhere. He knows which ones are a little bit less under. He knows which regions have the better, sweeter spot for his guys. And if it's below a certain level, it's not delivering the work. And he's got to put a regional manager that looks after a zone to drive around to that store. And it's not paying enough. He kills it. There's a better place to go. And that man right there is a process-based trader. He doesn't even know that he's a trader. He's a process-based trader. He does not tolerate even mediocrity, never mind losses. And when you get to that level, It's no doubt to say that she's a centimillionaire, extraordinarily effective. The whole family's in the business. They have weekends where they do turnover that's scary, scary numbers across the board, across variety of brands. And the franchise owners ask him for advice and what he thinks on stuff. That's the level you got to aim for if you want to engage in investment and particularly trading, which could involve some leverage. And that is a non-toleration of things that don't smell right, even before they start costing you money. That's the most valuable. It's the money management. It's the non-take of a negative. It is working and knowing your game and being, this ain't right. It should be doing more. The area isn't what it is. I've given it X amount of time. And our method has time stops. It has hard stop losses and pending entries. And the return is known before if successful. And the loss is known before if unsuccessful. And the time closure point is known if neither successful nor a loss. And the loss or the gain is cut, but it's not the full gain. And do you know any other trading method that tells you where your stop loss should be, where your entry should be, how much you're going to make? In other words, going into a business not knowing your return is most traders' approach to retail trading. They don't even know on each entry what they're hoping to get out. And if you look at what they do, they're snatching 0.75 of what they're risking, and they're letting losses run for 1.8, 1.9 before they treat it as a paying experiment and they relent. That is it. That is it. Process, method. It's called HVF method. It's process driven. It captures everything from timing, projection. And that's why I'm saying, listen, it might go beyond our target for a while, but we're very happy with 38 Rs. You know what that means? Technically, on something that I told you about that happens to be working first time, you should only, if there's 38 Rs, it should take me 38 goes before I get it. How come I'm getting it the very first go? Because markets aren't that efficient. No one else saw it who understands asymmetric rewards to tight stops. That's why you're not hearing it elsewhere on YouTube. And we've done it first go on a 38R. I've got 37 losing trades already paid for. And I don't tend to lose 37 in a row. So that's the benefit. That's the method. Do you want to be that operator? And you've got to get to know your business and you've got to be patient. He doesn't add stores if they don't make absolute sense. It's got to be the right brand he's going in with. He's got to be happy with his relationship. He's got to be happy with his landlord terms. He's got to be happy with that he's got the right staff to go in and be winners. He's got to be happy with the income group that's right for that brand and the volume, the density, the safety, every single thing, the parking, right down to his supply of the meat for his burgers that must taste better than everybody else's. That's how you operate, man. And if it ain't right, he'll wave it goodbye dispassionately. And he'll wipe his face and he'll take his 1 unit of loss. And in many instances, he's pulling out on a time stop saying, you didn't deliver inside the time I expected you to do. You're not sweet spot for me. How many of you can say that about your trading? And if you can't, maybe it's time to consider. That's the goal that we aim to provide for you when you do HVF method through the Trading Metamorphosis program. Come and have a look on the live trading day. The link is below. With that, I love you and leave you. Let's see if we turn out right. I'm always dispassionate. You know, the guys will show up and tell me how wrong we are. Gold shot to 3,500. It's no problem. I'm invested in it. I won't have sold it. I'm still making alpha. But at the same time, targets mean something. Ask the XRP guys at 3.36. Ask the bull flag target at 97K. You didn't spend a great deal of time, much over 97 and 100K. You've spent more below 100K and 97K in Bitcoin, and you've churned. And you would have cost yourself leverage, trading costs, borrowing, and all of those other things. And I see XRP underperforming for a spell before it potentially gets reworked in. Catch you next time. Thanks for watching. Like and share. Bye for now.